because this is where the illiquidity works for you, because they get locked up and they don't trade again, so they don't get puked. The other one interesting I've talked about before is, I think, something that's really underpriced, potentially, but riskier, is Bored Ape. What we would look for from here is a further weakening of the dollar to give us more clarity of that, because it leads as part of financial conditions for a long basis. But probabilistically speaking, it looks like it's going to go on a lot further than people expect, just because the cycle's been extended because they kept rates so high so long. I mean, the reality is, outside of all of the noise, Trueflation is showing inflation at 1.75% and has done for the last several months, and rates are at 4.5, wherever they are. It's stupid. I mean, rates need to come down 200 basis points.
Hey guys, welcome to Everyday Finance. Crypto has been going through the roof at an average rate of 150% per year, destroying every other market in the world and turning even small purchases into huge profits. That's what CEO of Real Vision, Raoul Pal, has to say about it. He says that more brokerage accounts are now held in crypto than in regular markets, which shows how popular it has become. Millions of first-time users are signing up with big platforms like Binance and Coinbase, and many of them are skipping stocks altogether and using crypto as their main way to save money. Adoption is growing quickly around the world, especially in places like Nigeria and the Philippines, where banking is hard to get to. This makes digital assets the clear choice. Bitcoin and Ethereum have consistently given triple-digit yearly returns for the past 10 years. This makes crypto one of the best ways to build wealth in modern financial history. Stay until the end to hear Raoul Pal talk about how this wave of adoption could give buyers chances that will change their lives.
There's not an ETF yet, is there, on a basket?
We're getting there. I think we're like, if we haven't got one yet, they're being approved as we speak. Because
and that, I think is a big deal.
Yeah, I would agree. I would invest in that for a large bit of the portfolio, which I just want to have as like a passive investment in this space.
Yeah, because my thesis, my overall thesis, this space is going from 3.5 trillion to 100 trillion. What's the easiest way to capture it? Well, I built an asset management firm, XPAM, because we invest in hedge funds, a basket of hedge funds, so it's a fund of funds, to be able to capture that in the best way possible. But there's a dumb way of doing it as well, which is to own the index, and you'll capture that trend just fine.
Right.
You're looking for the hedge funds to outperform or manage volatility risk, fine. But it still works. I've had some trades in, Robinhood, Tesla, Rocket Lab, a few things here and there, because it's intellectually interesting. They go up a lot, so you can make some really good money out of some of those tech plays. And so we've had some really good ones, but the bulk of my own personal capital, I just keep it in this. It's just easy. I know that's weird. So maybe it's easy, the most volatile asset class I've ever invested, and it's like, well, I don't need to do anything. I just need to hold it. No, that's right. So
you can.
If you're looking at the cheaper end of the market, if you're looking for the cheaper end of the art market, just to get started, but it's not cheap, but mid-range is chromey squiggles, right? Right. OG space. If you're looking at PFP collections, which are not my most favorite unless they're super kind of culturally relevant, obviously you've got crypto dick butts, you've got Rekt guy, you've got MFers, you've got me bits. Those are all kind of culturally relevant that have big fan bases and broad ownership.
I don't know if I can you can see this now.
I mean, Rekt guys are a 1 ETH floor right now. It's not expensive.
Rekt are at 1 ETH. Obviously, that's interesting. But like, there will be some here, and I think what's interesting is starting to see some of these like these NFT collections that people think are going to get bought back out again. But I do think that stick to editions of the top artists. That's always a good way to
yeah.
Look at
I mean,
stuff.
the X-Copy's got this great hierarchy of stuff. So you can start with Max Payne and Friends, which is cheap, or you can go up to a 1 of 1. There's tons in the middle as well that are trading a lot.
Meebits, obviously. Sergito, we gotta give him a shout out for now running that. I think they've got a good chance. But the interesting thing about this, they are rallying and they're holding their gains.
So
And if you've been in meme coins for the last 2 years, like things rally and then they just drop 70%. NFTs,
because this is where the illiquidity works for you, because they get locked up and they don't trade again, so they don't get puked. The other one that's interesting I've talked about before is, I think, something that's really underpriced, potentially, but riskier, is Bored Ape at 12 ETH.
Yeah. So this is the interesting one, because what I just said is this, this whole equity play could come back. And I do think that Bored Ape suddenly become an interesting trade again, if that was to be the case. Like if a gaming firm looked at them and been like, hey, this could be good for our stock price if we bought this out or took this brand. Adam Weitzman, who's a very big collector, I'm sure you know him, came out and bought 5,000 of the other deeds the other day, which is their gaming play, but there's just a bit more positive sentiment around NFTs, and I'd be surprised if they don't take part in this a bit more. At 50K, they've also got a coin as well, obviously, which allows for this more this like more dynamic
I mean, they pioneered this whole IP play thing of integrating gaming merch, allowing networks to build stuff on top of it, then have their own coin. Now, it's not all worked out perfectly, but let's see. That's one for me. I mean, they're not cheap, but considering what outrageous price I paid for mine at the peak of the bull market, they can go further.
I've always got a soft spot for Bored Apes, as you probably know. They've obviously the collection that we kind of made our name on. But yeah, there's other, you can do mutants and you can do Bored Apes. So I think I would agree with you.
People, I'm just going to share this one, just so people know where to start. There's an easy website called NFTfloorprice.com, I think it is. Is it NFT?
Yeah, this is a good
pricefloor.com. Really easy. You can click on punks. It'll give you the chart of punks in dollars or in crypto. And you can start just looking through at the prices, the volumes traded, how much supply is. That's just a really simple way to have a look through this collection. So there's me bits. How's our friend Sergio been doing? Well, let's check it out in the last 3 months since he's been involved. Now needs to load. Let's see if he's actively adding value or destroying value. You never know with Sergio.
Incredible time actually to have bought like him and Spencer both bought these back from Yuga.
So look, here's the Sergio effect. It went from half an ETH to basically an ETH.
In spite of him. In spite
of having a mad Mexican running the thing.
It does feel as though that was the trade. Like I've said, like it was a good time to buy IP, and I think it's really ironic actually that so many of these changed hands at that time. Like if Yuga kind of kept hold of them, suddenly I think they probably could have sold them for a bit more at this exact stage. But
Mickey bought punks for like 24, 22 million. What, for the most legendary IP in the entire space? He paid nothing for it. I think they also liked it because he's putting it into a foundation that's not going to fuck with it, versus selling it to Microsoft.
Raoul Pal sees crypto and the exponential age as a unique combination of money, skill, and new technology that only happens once every generation. He talks about how some of the smartest people in business, technology, and the arts are putting their energy into cutting-edge technologies like AI, blockchain, robotics, and even space exploration, which is causing a powerful wave of progress. These areas move very quickly and have a lot of volatility, which scares off new investors. But Pal says that those who are willing to ride out the rough spots can make huge profits. Like when people bought into tech giants like Amazon and Google. After the dot-com crash in the early 2000s, his advice is meant to be easy, but very important. Don't use leverage. Keep your tokens safe, and know that volatility is not a flaw, but a part of this journey. For Pal, this cycle is all about being patient, because that's what opens the door to returns that can change his life.
The work that Julian and I do on this in GMI and RV Pro suggests that the likelihood is it's into Q2 2026. What we would look for from here is a further weakening of the dollar to give us more clarity of that, because it leads as part of financial conditions for a long basis. But probabilistically speaking, it looks like it's going to go on a lot further than people expect, just because the cycle's been extended because they kept rates so high so long. I mean, the reality is, outside of all of the noise, Trueflation is showing inflation at 1.75% and has done for the last several months, and rates are at 4.5, wherever they are. It's stupid. I mean, rates need to come down 200 basis points, at least.
I find it really difficult to judge cycles anymore, and I'm not as big a believer in like the 4-year cycle. I think we're drifting away from that to more one which mimics the broader macro cycles rather than just like the halving cycles.
Right.
But yeah, at this stage, financial positions are still pretty tight. Like interest rates are still pretty high across the world. Like, feels like we could really kick things into a different level if we start to cut rates and
Well, just
QT moves
if you
more
take
into
it back
QE.
to the idiot proof levels, is okay, think of all the people who want to buy things, and think of their grocery bills that have been super high and they don't come down. And then think of their mortgage payments, their car payments, and other interest payments. Well, if that comes down, people have more disposable income. Meanwhile, the companies that they work for do better, because that's what the ISM going up means, which means people get paid more. That whole positive feedback loop is still to come. Yeah, I mean, my general view is early stage adoption that is getting real adoption, and we're seeing the numbers of the TVL and the stablecoin use and all of the stuff going on in SUI. In a lower free float token, goes up more. It's as simple as that. And it goes down more in a bear market. And then you need to see how many of the developers and the projects stick around, and how many of the people who own the token stick around. And that's what ETH went through in 2020. The 2019 bear market, that was ETH's test. Solana got tested in the 2022 downside. SUI will get tested next time around, probably. But
I think it's
so
important to know,
I've just,
actually.
and then all I do is I make it idiot proof, because we all build our narratives in our head. I just look at one chart versus the other, and one versus the other. And so, look, I mean, here's the simple way that the idiot Raoul looks at things: is I just pull up this, my trading view. Let's find the SUI. That's the SUI Sol chart.
Mm.
It's like, okay, what do you want to own here?
Yeah,
I know what I want to
looks like
own.
it's going higher.
It's written all over that chart. And it's been written over
I
that chart ever since it broke this downtrend, which was where we started making the big allocation change to this. And it's worked beautifully ever since.
How was SUI ETH done? Has
SUI,
that been a bit more fair? I'd
let's
be
see.
interested to know, because obviously it probably was outperforming it for a while. Look, I think what you said there is really important, which is that it's a lower. Obviously, there are unlocks for SUI. You can't get away from that. There's a decent amount of them, and that was the same for Solana. And Solana had this crazy all-time high price on that first cycle, right? It went all the way up to 200, just over 200, right? And then it went all the way down to 7, and it was all about the unlocks coming, and that's a worry. And I don't think SUI's, obviously we're not going to have the sort of FTX style cataclysm come for SUI, but you have to time these coins a little bit better. So you have to be very disciplined on like when it breaks down on a chart, like you just said, if they were at a turn.
So here's the chart of SUI ETH.
That's
So
an interesting
obviously
chart.
it massively outperformed. It's now correcting. You need to see some sort of, my guess is we'll see some sort of correction pattern that probably gives us another leg higher, but wait and see. But ETH is currently outperforming. I have no reason to believe, this is on the weekly chart, that it stops yet. But I've owned a bunch of ETH via NFTs, and I will be looking at where this finds a base. Does this morph into a different chart pattern, or do we just kind of perform in line for a bit? Don't know. But I mean, Christ,
Yeah.
that was a good trade. This whole kind of SUI ETH trade. Our general view, using our macro work, is the dollar probably still goes lower. That we've got another leg to go, and that's the leg that would confirm a pushing into, let's say, Q2 versus Q1 of 2026. Also, listen to what Scott Bessent, Trump, and everybody says. They basically want a weaker dollar, and so everybody in the world wants a weaker dollar because it helps the business cycle. It helps everybody. People need access to dollars. So I still think we've got another leg lower before dollar strength starts kicking in. Normally, when the economy is strong, the dollar is weaker. It's when things turn again that you tend to get the dollar strengthening. So no, I'm still biased towards weakness.
A lot of people who try day trading end up losing money, according to Raoul Pal. Non-stop dealing may bring in a lot of money for brokers, but it rarely makes traders rich in the long term. Powell says that famous investors like George Soros and Stanley Druckenmiller didn't get rich by making lots of short-term deals. Instead, they did it by making long-term sure bets and watching them come true. He says that global liquidity and the acceptance of transformative technologies are the two main forces that determine the prices of almost all assets. That being said, crypto and new technologies are still the most exciting possibilities. Pal says that instead of spreading money out among hundreds of tokens or stocks, investors should focus on projects that have real-world use, strong and stable communities, and price charts that consistently show that they are doing better than Bitcoin. He thinks that buyers will have real long-term success if they take that focused, disciplined approach.